What's up, guys? Another episode of the Door Stories podcast. I'm super excited to have my name twin, Apurva Parikh with AAP Development, which is his real estate holdings business, here with me today. We're going to unpack your whole story. Thank you for taking the time to be with me. What's up, brother? How have you been?
Man? I don't know if the world is ready for an Apurva to Apurva
yeah, I know.
podcast.
I'll refrain from just calling you Apurva so I don't confuse myself. But great to have you, man. It's been a long time coming.
Yeah.
We've been trying to make this happen.
Yeah.
So I'm just going to rip it off. Let's start with your professional journey.
Yep.
Tell me your background. What were you up to prior to your real estate life, and then we'll kind of segue into it.
Yeah, absolutely. Thank you for having me. And I know it's been a long time coming. I'm super excited to talk to you. My story is actually, it's kind of an interesting story. So I have a tech background. So I went to U of H, got my computer science degree, worked for a slew of oil and gas companies, startups, tech companies, primarily selling software and helping big Fortune 500 companies implement technology. Throughout the course of that, it's kind of funny, my family is involved heavily in real estate. So my dad has been a commercial broker for the past 35, 40 years. So I was surrounded by real estate throughout my kind of college life and corporate career. And anytime my dad would see something or a deal or an opportunity, he would tell me, hey, look, invest a little bit of money here. I know you're working and got married and we're raising a family, but I never lost sight of the fact that there were opportunities out there. So while I was working, I passively invested, continued to keep my day job, and that's how I was exposed to real estate, was just sort of through my father and then being surrounding around it. And eventually I kind of realized that I have a passion for this. My business partners and I had very complementary skill sets and strengths and interests. And so it just sort of came to be. The journey took like 20 years in the making, but for it to become a mostly full-time thing, it happened throughout the course of that. And I finally realized that I can't do this as like a hobby or a side thing. It has to be kind of the whole enchilada has to be real estate. And so that's how I kind of came to it. So professionally, just, IT, tech world, and I think that some of that experience, which I know we'll get into, has helped in the real estate journey for sure.
That's incredible. So, blessed to have some great advisors, mentors, including your father along the way to kind of guide you and kind of dip your toe.
Yeah.
So, you had a successful career in the technology space, and then just decided, hey, like it's time to pull the plunge into, or take the plunge into real estate. What was your first kind of asset you dove into?
Yeah, the first asset, and the asset that kind of started everything, was multifamily. So there was an older, I don't even want to call it an apartment. It was like kind of townhome condo community off of 59 and kind of Hillcroft in that area. Adjacent to Sharpstown, and it's still there. It's kind of dilapidated, but that was the first kind of asset class, first actual hard asset that my dad was the broker on it, and one of his clients was like, it was also his first full-time GP kind of deal, and I was in like early stages of my career, and so my dad was like, this is a good part of town, and you kind of learn the fundamentals of what to look for. It's not just location, but it's also like what's around it, the exposure to risk, the cost, and things that, this is a theme actually, things that people would be running away from, we kind of went towards at that time. So that was the first thing. It was like 7 or 8 units, right off the 59, like right off the feeder, and yeah, that was kind of the first asset that we.
And were you a LP in that deal?
I was a GP in that. Yeah.
GP in that deal. Perfect. So you put the playbook together, decided how to execute.
Yeah. Was
there some value add? Like walk me through kind of what that looked like.
To put it mildly, it needed a lot of love, right? So it was, if you know that area at all, a lot of it's a rough area, very blue collar, a lot of crime, a lot of like, just over the course of years it had been neglected, but there was potential. So we took it over, we renovated all the units, or the units that were vacant. It was like half occupied at that time, so 4 out of the 8 were occupied. We put a lot of love into it. We built it up, we kind of did more marketing, and that's kind of where my, even though I was doing it 50-50 at the time, that's where my kind of marketing background and the ability to be able to sell came into play. And so, we eventually like stabilized it and held on to it for a few years, and then exited, and then sold it. Yeah.
And then off to the races, I would imagine.
That's when the real multifamily journey began. When it was right around 2008, 2009 timeframe, where the market was distressed.
Yeah.
And we picked up some great assets from a multifamily perspective right after that.
And so I'm going to continue down that journey, but we've scaled to 4 major complexes, 1,100 units, which is insane.
Yeah.
And a couple different asset classes along the way. So you've got some hotels and things. So let's unpack that. So, all right. So you sell this deal. Now we roll this into more assets.
Sure.
Still multifamily.
Yeah. At that time, we really started to look at like what segments and what markets in Houston are either underserved or have assets that are value add potential. And so this is like, I know in the last 5 to 7 years, multifamily has exploded in Houston, right?
Right.
And everyone has dabbled in it or wants to dabble in it. At that time, there weren't a lot of people looking in like this for the C-class assets in the north part of Houston, which is another blue collar area.
Yeah.
But the communities there deserve better kind of living conditions and more opportunities to have places to live. And so we picked up our first 2 apartments right around the real estate bubble crash, the housing crash in 2009, 2010, and foreclosure. So we got super lucky. A lot of real estate, as you know, is timing and luck, right?
Right.
And right place, right time. But also people were running away from those kinds of assets around that time. So that's when we picked up the first 2. And then we got to know that market really well, got to know the people in that area, made relationships with brokers and other developers and owners. And that was kind of the starting point of the multifamily journey. And from there, we sort of looked to be opportunistic in that market to pick up other assets, multifamily in that area. And then in parallel, the hotel stuff was kind of simmering, but that didn't all take off until 2014, 2015.
I love that. So timing in a sense of like just, knowing when to run towards opportunity when people are fleeing, that's kind of one of these golden rules of real estate is like, that's usually when opportunity, and there's been buzz around that coming in this recent market, but none of us have really quite seen it. But it's an interesting, paradigm that we're kind of coming across because we're hopefully, opportunistically, maybe there's some deals to be had.
I think so,
in the near term. So I want to unpack it a little bit more. How were you guys raising capital for this? Were you self-funding? I know you had some wins along the way.
Yeah, we were self-funded on the multifamily side. We've been self-funded for the most part on the multifamily side. My business partner, they're a family-owned business. They own a lot of jewelry stores and convenience stores.
Okay.
So he brought his family kind of business experience to play. And then I had a couple of other silent partners. And so we bootstrapped most of the apartments ourselves. And basically, buying assets at foreclosure at that time was like a huge risk to a certain extent. But we looked at the fundamentals of what demand generators were in the area, the rent rolls, looking at kind of just the basic bare bones of what we would buy from an asset perspective. And we were confident that we could add value to it. But yeah, we bootstrapped the multifamily ourselves.
That's fantastic. And then, so where do the hotels start coming in the picture?
So the hotels is another client of my dad's who, similar age, similar perspective. He kind of came up from the hospitality industry, worked for Marriott, worked for IHG for several years. So he had the hospitality experience. And he looked to me and was like, hey, look, you already know real estate, but you don't know hospitality. But you know sales operations, you know how to build winning sales teams and customer service. That's the hotels kind of came into also kind of an opportunistic play there as well, where we looked to do ground up construction. Our first property was in Channelview, which is like ship channel, chemical, refinery. Those are the demand generators. So that was the first project we did together that I did as a GP, and that kind of started that journey in parallel. A little bit later than the apartments, but happened kind of after that.
And I mean, for you guys, the vision was still kind of this real estate with kind of the operations of the hotels, as your cash flow generator, the revenue generator. But it was still at its core real estate. Yeah,
I mean, it's always been real estate at the core, and then just finding, we settled on hotels and multifamily as the asset classes, but at the heart of it was really value add, customer service, and providing a service to the residents and the guest in the hotel use case. At the end of the day, that was kind of the North Star, if you will, for both sides of the fence, if you kind of from an asset class perspective, was how do we provide the best experience? What are we doing to add value in the apartments for sure, because we're taking over existing assets that were distressed or needed some improvement. On the hotel side, it was really just how do we build a best-in-class experience for
turnaround.
guests.
And so are they flagged hotels?
Yeah, Holiday Inn,
Holiday
service
Inns.
Holiday Inns.
Amazing.
All of our hotels are in the IHG family, Holiday Inns and Holiday Inn Express.
And you have like a full GM staff, like just
we do.
It's all just running.
Yeah,
kind
we
of
have
on
a
its own.
director of sales, GM, and then myself and my partner. We kind of run around and he does more of the
Just big
operations.
strategy
Yeah,
stuff. Yeah.
I'm more involved on the hotel side, on the strategy side and development, and we're doing a new project. So figuring out how to get in and get out of things.
And it sounds like your ability to kind of process the data, see the indicators that to where and how.
That's a big part of it.
Yeah, and then one of my questions was going to be like sourcing deals, but it sounds like you guys have run towards the distress in markets.
For sure. On the multifamily side, that's definitely been the ethos, is to kind of go where people seem to be running away from, like kind of zagging where everyone's going one way. We've sort of taken a contrarian approach for the hotels in terms of like sourcing deals. Like having grown up and lived here and being around real estate, and my dad knows everybody, my partners know a lot of people. It's really been all about relationships and keeping your ear close to the ground, absorbing as much information and knowledge as possible, and just building a good network of like-minded individuals. And we found most of our success in finding deals that way, for the most part.
And so the hotels, are they GP? So are you not raising outside capital for that, or do you do some syndications?
We haven't. I don't want to say they're full-blown syndications, but for the hotels, we do have different partner
investors,
groups.
partners, more like joint venture style.
Joint ventures. Yeah.
Okay.
Yeah. Go ahead.
No, go ahead. So today, fast forward, we've got 3 hotels.
Yep.
Another one in development.
on
knock
the way.
on wood.
Yeah.
Some land assets that you kind of just opportunistically hold.
Yep.
And then 1,100 doors.
Correct.
So where's your focus on a day-to-day basis?
Yeah. So right now the focus is primarily on the hospitality side, because we're trying to build a new hotel project in by the airport. But I kind of use my time to really just be out and about in the markets, meet with folks like you, smart people like you, and build as many relationships with people in the banking world, other developers, other hotel owners, other apartment owners, and just get to know as many people. And so I spend a lot of my day doing that kind of work. And then the other part of it is thinking about, are we providing the best experience for our guests or our tenants? Are we keeping our employees happy? Are we doing the right thing in terms of being proactive in terms of maintenance for the apartments? And how are we getting ahead of potential problems? So I'm trying to think in terms of that, because one of the things that we've seen and one of the things that we believe in for the multifamily world especially is the big costs are maintenance and being ahead of those big roof repairs or HVAC repairs.
Right.
How do we get ahead of that?
Stuff.
How do we use, and I know we're going to get to this, but how do we leverage better technology and processes to stay ahead of that, to maximize our ROI as well as just the guest and tenant experience, make it better for them?
Well, that's the perfect segue, to be honest with you. So your career in technology, and now you're kind of focused in real estate. Let's kind of tie those together.
Yeah.
How do they complement each other? What's the synergy?
They complement each other better than I imagined. When I went into real estate, especially hotels, it's such a antiquated way of doing things, and people are very resistant to change. And like my dad's generation, who kind of started all the hotels, the business as we know it, they're very focused on minimizing costs, basically self-managing it as much as you can. And so that's really where working with startups and being involved in the tech world really helped, because you can do a lot with little, and you can scale technology better than humans, like human interactions. And so it was a great intersection, especially when you think about being ahead of the curve in maintenance and being proactive in terms of guest experience, and leveraging offshore assets and tools to do the most basic tasks and mundane things, and helping free up our time to do really strategic and critical thinking things. So it was actually the perfect balance to kind of what the businesses needed at that time.
Do you mind unpacking a practical application of that? So like we, let's just kind of like go through the journey.
Yeah.
We found this kind of underperforming hotel.
Yep.
We take it over.
Yep.
You know, that's kind of the baseline.
Yep.
We've now acquired it.
Yep.
Run your playbook, like if you don't mind, like let's walk through
so I
that.
mean, the if you're taking over a distressed asset or an asset that was underperforming previously, you have to look at, like, there's three things that are probably like hurting it, right? You're not getting enough heads in beds. Like what's wrong with getting people to come? Why aren't you attracting more guests? Something's probably off in the cost structure.
Okay.
So that's a people thing. And then the third thing is like, okay, this hotel needs a lot more maintenance, and there's a lot of things that are broken and need repair. I would probably go to the sales, given the way my background is looking at sales first, because sales cures most things,
most problems. That's right.
And that's where technology really, really accelerates growth, and where a lot of hotels and the industry in general has, previous to the last few years, has not embraced technology. So it's even something as simple as implementing. So at our hotel that we have in the energy corridor, we implemented a very basic customer relationship management tool, because we had great salespeople, but they were going door to door to the businesses around the hotel, and that hotel in that market was dependent heavily on corporate travel, which these big businesses, and having worked in big companies, I know how they make decisions, and it's based usually on price and cost and customer experience, and we weren't delivering that, right? And so we had to figure out how to mobilize the sales force, and that's where leveraging technology, implementing better processes. Like, you don't need to go out and go door knock 15 doors, because that's going to take you a week to do that. Whereas I can reach 100 different companies in the area just by knowing the market, knowing who's there. So
pulling down the
data, market data, knowing the Houston Business Journal. It's nothing that even costs a lot of money, right? It's just basic Google searches. And Houston Business Journal has a lot of this. The Chamber of Commerce helped quite a bit. Knowing, besides the big 4 or 5 oil and gas companies, there's 15 other small to medium-sized companies that are in that area that
have transient
staff. They have people coming in and out of the area that need places to stay. They have conferences. Let's do something fun for the employees, do a happy hour on premise. So it was kind of thinking out of the box.
Great. Yeah.
And that applied to the airport hotel even more, because if you think of the other hotels by the airport, if you think about airport business, you automatically think you're going to be getting airline employees or traveling guests or people with families. It's actually, for us, it's the flip side. We have, like, most of our clientele is corporations. We didn't know that until we did some market research, and that leveraging technology and very basic tools like Salesforce and other tools that just unlocked the market better for us, so that we weren't competing on price and cost with the airlines, because they'll beat you up on rates. We were elevating our product to the corporations who were willing to pay more. We just didn't know they were there before. So that's
delivering
a very simple
value to justify the expense.
Yeah. So that's a very, like, basic thing on to me. Sales cures everything, like I said. And so knowing who your customers are. A lot of these hotels just go on, I'm going to charge the cheapest rate, and hopefully people will come because I'm Holiday Inn or I'm Days Inn or I'm Best Western or whatever. But being more proactive and treating it more like a B2B interaction versus a hotel operation is what really helped us unlock more revenue across the board. And then the people and kind of the operation side of it, I know we're talking about hotels, but especially on multifamily, looking at data and, like, understanding the life cycle of roof, the HVAC, plumbing, looking at the life cycle. And so the goal is to try to be as proactive as possible, and without spending hundreds of thousands of dollars on expensive software and things that will monitor and track everything. Just look at the historics and look at what wasn't being done. And a lot of times you're going to find value in, like it may cost me more money now to paint and fix this, but in the long run, that's going to buy me 10 more years.
That's right.
And that's really, if you look at kind of the ways you can maximize your revenue in the multifamily thing, is you can either raise rents or operate cheaper and not raise rents, but be as lean as possible. But if you want to raise rents by $50 to $100, you got to do something else to kind of offset that, right? And so that happens over time, and so taking a long view.
And I mean, one of the, specifically multifamily, one of the hidden expenses is just churn, right?
Yeah.
If you get happy tenants that, because you're delivering quality space, they stay longer, you know? And so that turnover gets very expensive, right? You've got all the scratch and dent stuff, you've got vacancy, you've got all these challenges. I love that. So I want to like pick at a deal. Let's pick, what would you say is your best deal?
I mean, I would say like the best deals, I mean, obviously the multifamily. I mean, we got incredibly lucky that we scooped up 2, and then we sort of were like, okay, let's get 2 under our belt. The next 2 that we bought, kind of sort of in that same submarket in North Houston, came because of relationships and knowing the other owner developers who were in that area, who were kind of like, we're thinking about exiting the market. And so that was like another 500 doors that we bought after the first 2. The first 2, I think, those were unicorns. Like looking back on it, you're like, why wouldn't everybody have kind of thought that, right? But I don't want to say that happened because of any huge like scientific breakthrough on our part. It was more because, okay, that was the right place, right time. But the other 2 that we ended up acquiring were based upon having a track record. We had great tenant customer satisfaction, and we had delinquencies were low, and so we felt like we had built a pretty good operation, and so that's what led us to expand. And I think those next two units, the next 2 developments that we bought, we now have like a track record and I guess a brand for that submarket to kind of go in and say, these tenants usually don't get treated very well. People just, they're afterthoughts, right? They're like your $1,000 and below a month renter.
Got it.
But we want to up-level their experience. Like we want to have a nice pool. We want to have nice, safe, secure spaces, and we want to provide them with great tenant experience, great customer service, leverage technology where you can. And so I would say those next 2 deals were actually really critical because then we proved to ourselves and to that market that we're here for the long haul. You can trust us, and we sourced them, and it came about just because we had relationships with banks and the lenders who were in that area, as well as the other owners who were like, look, if we're going to sell this, we don't want to have a huge thing, and we want to know that it's going into the right hands.
I love that because when you think about the sourcing off market deals, you think you're just kind of cold calling owners. But this was your execution, the vendors, the trades, that opened the doors, which is not the obvious route, right? And that's great.
Yeah, no, I appreciate that. And it's also like, this was kind of like right before the data explosion. Like now I think pretty much data's been democratized for the most part. Everybody knows mostly everything you can know.
Our cell phones are the nonstop phone calls.
It's nonstop, and so this was kind of where you had to like do the blocking and tackling of development was more like based upon face-to-face conversations and knowing who owns that office building down the street or that apartment across the way. So having those relationships, I think it was paramount to those transactions for sure.
That's awesome.
Yeah.
What about the worst deal?
Yeah,
is there a bad one?
I had a feeling you would ask that. So I think for me, I'm going to answer it kind of not in a. It's not to be super cheesy, but to me, the worst deals are the deals that you sometimes don't do. And in our case, we've had some experiences where we were offered to do certain things where we turned them down. Like a long time ago, like when we acquired those first 2 apartments, we were offered money to sell and go into a joint venture with somebody in Austin. This is like early 2010s, and right before like Austin like became whatever it is now, right? We said no, like we're happy. We don't want to grow too fast and put our money at risk and put our investors' money at risk. So we turned some of those opportunities down early on. And I look back on it now, I'm like, man, Austin at that time, 13, 14 years ago, would have been like gold mine of all gold mines.
Yeah.
So sometimes it's like we were disciplined in some of those things to the point where we also didn't sell in the peak and kind of go from having 2 C-class apartments to investing in an A-class in Galleria. Which, who knows, we may have been underwater, we may have lost our shirts. But sometimes I look at it always like, we can look back and regret some of those deals in Austin that we didn't do, or some of the, like we had a hotel in the Greenway Plaza area before I was kind of a GP level. and we sold it to another hotel owner who immediately tore it down, built apartments, and they killed it, right? So we probably should have kept it, probably should have done that ourselves, but sometimes you have to look back and think that, I've avoided a lot of maybe upside deals, but I've also avoided a lot of things that could have gotten us into trouble down the road with like trying to take advantage of a hot market and selling at the wrong time and with the hubris that you think you're going to just rinse, lather, repeat into something else.
Right.
So sometimes it's the road not taken, and that can be a good and bad. So I always think of it more philosophically in that sense of like, I've avoided some pitfalls, but we've maybe have missed on a couple of things, I would think.
But I think those are
markets,
are great lessons because, one, you were centralized heavily in Houston.
Yeah.
Austin could have been a distraction.
Could have been. Yeah.
You just don't know, right? If you took your eyes off the prize or like what you had here. So, and that's, you kind of see that often with, real estate investors is that sometimes they go a little too far astray, whether it's the asset class, whether it's geography, right? And sometimes that can, it doesn't always. Sometimes you get good tailwinds and you just get lucky. Like Austin's a great example.
Yeah, absolutely.
You could have rose a tide.
Yeah, who knows? Yeah.
Austin, unfortunately, is not hot right now.
No, it's kind of the
complete
cycle.
opposite, right? And so it's just, timing, of course, but you're using data to drive your timing.
Trying to,
right?
As much as we can.
To capitalize on the timing, right?
Yeah.
And so I love that. I love that a lot. So I want to talk about the long-term vision, where we're going, but in between there, I want to unpack a little bit. We were talking about your son, right?
Yeah.
Thinking about legacy, thinking about what we're building. I mean, you've built an incredible portfolio with, still a lot of time ahead. Walk me through what your vision is to kind of bring him in to the fold per se. And he may not love real estate. We don't know what our kids are going to do, right?
Yeah, I'm actually like excited so he's a freshman in college studying finance and accounting. And he right now has a huge passion for private equity, investment banking, and real estate is like the most he's surrounded. My wife is a realtor.
Yes.
So he's surrounded by the language of real estate. So he gravitates towards it, and both of his grandfathers are also in real estate. So I think he feels like that's the most natural thing. But if I think about legacy and like, I want him to have all the experience that I didn't get until later in life, which is working from the ground up. My business partner told me when I started to kind of dabble into hotel stuff, he was like, I don't want you just going into the office. Like, you need to go make beds. You need to go do around with the housekeepers. You need to go in the kitchen and see what the chefs are doing.
Get your hands dirty.
You cannot learn the business by just sitting in an office and looking at spreadsheets. And so I did that, but in a very compressed time frame, where I want him to kind of know every single nut and bolt and screw that's in any asset that if he wants to do real estate, and anything he does, start from the ground up.
Yeah.
So that's definitely something that I'd want him to do that I didn't do until later in life. But I guess in terms of the overall strategy and vision, I don't know what asset classes we may be in 5 years, 10 years. But I know whatever it is, it's going to be centered around the guest, tenant, customer experience and building the best possible experience for them, leveraging data to do it, also building an organization and culture that I can copy and paste it and put it into hotels, or I can put it into convenience stores. If we want to do syndication, maybe we'll do that. Land development, that's kind of the next frontier for us in the immediate future, is doing more land development, because we have some land assets that are undeveloped. So whatever it is, I think there's some core principles that have made us successful. And I think that we want to continue. I hope we can continue down that path regardless of what the asset class is. Because that, to me, I don't want to just be married to a single thing or one thing, but know your sweet spot, but be able to leverage the strengths.
What I love about what you just kind of explained there is sales and service seem to be at the core of your strategy, right?
Yeah.
And that was ingrained early in your career, even though like I know you said like I wish I'd jumped, but like that, if you had not had that,
for sure,
you probably wouldn't have that ability to execute, right?
Yeah.
So like, and you don't hear that a lot necessarily in real estate, strategy, right?
Yeah.
It's, to your point, it's kind of like, or to the earlier point, it's like, it's a lot about like ROI on the, CapEx and the spreadsheet kind of math and the formulas, but like sales and service, like that's your core. And I love that.
Yeah.
I mean, that's fantastic.
Yeah, and you're in a service industry, and you know this better than I do. You probably look at hundreds of deals a day, right, or whatever the number is. The numbers and the IRRs and the cap rates and the cash on cash, they're always going to be glamorous, right? And if it's coming to you or me or whoever.
At least the spreadsheets.
Yeah,
makes it look glamorous.
Makes it look good, right? But for me, I've been a big believer in you're investing in the people, you're investing in the organization, regardless of the asset class. So my anchor is always going to be around service, sales, and just the people that you're working with, and are they trustworthy, and all those things are inherently there. But beyond that, it's the process, people, process, and the timing of all. That's what to me matters the most, and I think that's always been there. And I guess seeing my dad doing that as a broker, and then working in the tech world, and being around that for 20 plus years, I guess it's probably embedded in everything we do now.
And I love that, and obviously you're going to carry on the torch with your own son.
I hope
right?
so. Yeah.
No, I mean it's obvious.
Yeah.
He's already a chip off the old block.
Yeah.
I love it.
Yeah.
Long term,
let's
just back to the real estate though. Like, is there a target in your mind for the portfolio? Is there like a mission you're on?
Yeah.
What does the next 3 years, 5 years look like?
I think once we get this new hotel project built, stabilized, let's see what the market brings. Right now, the hospitality market and the hotel market in Houston is a little bit uneven. The goal is to, I think, do bigger projects, do more land development deals, maybe expand outside of Houston a little bit more. I think always looking to challenges and seeing what the market needs, and having now done this for long enough, not that we have a crystal ball on what's going to be good and bad, because like you said, Austin right now is kind of going through a little bit of a down period. But I think just trying to be as opportunistic and kind of rely upon the things that made us successful to begin with, going to continue to do that. And so I envision us doing bigger projects in the sense of doing more ground up construction potentially, being more opportunistic on the multifamily side where we can, taking advantage of down markets to kind of where everyone else is running from. That's going to be another pillar. And I think like another part of this whole process and everything is how do we leverage technology even more? Everyone's probably been on your podcast and talked about AI. I'm sure that's been brought up quite a bit, right? How do we do more with tools like that and being mindful?
I'd like to expand on that.
Yeah.
Have you seen any interesting use cases?
Yeah.
Already, right? And we're so early innings.
We're very
in
early,
AI, but
and not all applications are equal. Like we went to Austin, my wife and my son and I. We went during Christmas, and the entire check-in experience, the experience while we were there, was all done via the phone, right? There was very little human interaction.
Right.
And I'm trying to see how we can incorporate more of that. Granted, our use case for having a hotel in the airport area or Channel View or wherever it might be, I think we want to have some personal interaction because we want to get to know our guests better. We're not such a big monolithic hotel. So I see those kinds of things as the immediate, how do we make the guest experience as seamless, and everyone's already on their phones, right? And as we get younger guests and millennials, and you have to serve them the experience that they're already getting in every other part of their life. And if we're so fragmented, then they're going to go to Airbnbs, or they're going to go to other places to stay for their vacations or whatnot, or even business travelers who are even more technology savvy. So we're trying to get in at the ground floor and figure out what's that bare minimum that we can do without disrupting everything. And most of it centers that I've seen with hotel owners is in that guest experience, is making it as intuitive and easy, and leveraging technology and mobile devices. And that kind of stuff.
Yeah, I mean, some early stuff we witnessed, or just ourselves in travel recently. We went to Tulum, and the entire guest experience was in WhatsApp.
Yeah.
Everything.
Yeah.
The room serve, everything. Anything you need to do. And then in Asia, when we were in, I believe it was Singapore, there was robotic.
That's crazy.
Staff.
Yeah.
Literally, there was for the housekeeping was a robotic element. There was a robo vacuum. I mean, it's coming.
Yeah, it's
right?
coming. It's coming gradually.
I don't think we're the Jetsons yet, but like,
No.
if anybody even knows what that means.
That's a
Aging
great
ourselves a little bit.
I think there's also like the flip side of it, and the other lever that you can look at this from is how do you streamline and optimize back office processes. I think about that a lot, especially in the multifamily space that is so driven by like leasing agents and all of that part. How do you make that process for not just your tenants, but for like you, like as the owner and operator of it? How do you leverage tools and technology to kind of streamline all the things that you look at from a back office perspective? And so there's a lot of innovation there. It's just a matter of how much money you want to spend and how much you want to transform your operations and bring your employees along for the ride. So that's also like the other part of the whole equation is how do you also look at that?
When it comes to tech, I mean, are you a buy versus build, or build versus buy?
Good question. So I've always been of the if there's someone who's an expert at something, leverage their expertise, figure out how it's done, and then see if it makes sense to build it yourself. But for the most part, we've been a buy versus build in the current portfolio. But like having been around technology and having sold it to so many different other bigger corporations, you have to eventually at some point build it yourself to truly have it be a competitive advantage if that's what you want it to be. Like no one's going to re-engineer Google Sheets or Word or Microsoft Office, but if there's something proprietary in the guest experience or how you measure and monitor your employees, I want to think that we'd look at that equation again. But for the most part, we've been a buyer just because we don't have time to reinvent the wheel on a lot of these things.
And I mean, technology development can be extremely costly.
It's expensive, yeah.
There's a lot of R&D. There's a lot of misfires, and that money doesn't come back easily.
It doesn't. It's a longer tail to have that kind of show itself in an ROI scenario. And so we've done a lot of digging around, and that's kind of was my charter at the very beginning, was like, how can we run our hotels more efficient, cheaper, more cost effective, however you want to call it, without spending too much money, right? It's like, how do you want? It's like I want everything to be faster, cheaper, but better as well. And so you kind of have to look at how is that really going to be a competitive advantage, or just something that you have to do as part of the operation?
Well, I love that even though you guys have parked yourselves with very reputable brands and franchises in the hotel space, you don't just run their playbook. You've taken it another level and said, hey, well, this is a great floor to start on, but we need to go beyond that, right? And I don't think that's kind of in the minority, right?
Yeah, I mean, if you look at the hotel industry at a whole, right, the franchisees are given a box to sort of, from a branding perspective, standards that you have to keep. You have to design your properties and the rooms with a certain design in mind and color schemes and all those things. But after that, it's kind of like...
It's still your own show.
It's your own show. And I think the way hotel owners and developers sell and market their properties has changed quite a bit. And if you're not thinking ahead and leveraging data and leveraging technology, and still trying to do things the old-fashioned way by just playing the rate game, you're not going to be profitable in the long run. And we've held all of our assets for multiple years, so we're not like flipping through assets and buying and selling properties.
Right.
So if you're going to do that, if you're going to have that kind of mentality or outlook, you have to have a very streamlined operation, and you have to be great at selling. And so that's where you just can't. We're not fly by night, and so we have to leverage better sales processes and better sales tools to make that happen.
You bleed sales, man. That's why we're such good friends and get along so well. I have to ask, you've got two similar but different asset classes. Is there a favorite?
I mean, I grew up more on the hotel space because my dad, that was what he did. He helped people buy and sell hotels. That's always going to be kind of the nearest and dearest, and where I've spent most of my time. So I gravitate towards that more so, and also because during COVID, I worked in our hotel quite a bit and saw that kind of the pain from the ground floor, so to speak, figuratively and in reality. So that's always going to be where I feel like I can roll up my sleeves the most. The apartments, they're great, and I love everything about multifamily in Houston, especially because it provides such a needed diversification of opportunity, and everyone needs a place to live, and you need to have different
affordable housing.
Period. Right. Especially in Harris County, it's been great, and so I love both, but the hotels are always going to be kind of the backbone.
And I think, I mean, you're a, for lack of a better word, social butterfly, right? And so like that hospitality industry really kind of like jives, especially with a sales minded person, right?
For sure.
I love it. Dude, this has been great. Apurva, thank you for spending the time with me.
Yeah.
We had to do that joke in here. But no, it's, I appreciate you taking the time. I'm so excited that, one, you're in my sphere, but also get to watch this journey from here to the next kind of version. We'll definitely do a catch up in the next, half a decade, I hope. Yeah. And I hope to have your son as one of future guests, the aspiring young entrepreneur that he is.
Yeah.
Well, no, I appreciate it. This has been fantastic. Thank you again for taking the time. I'll have the leave behinds in the show notes for everybody of like how to get in touch and kind of network with you in any capacity that makes sense. But I appreciate it, man. It's been great.
No, thank you for the opportunity. It's always great to talk to you whenever we meet and catch up. I learned something new. And yeah, I want to flip the thing and ask you the questions next time. But it's been great. Thank you for having me. I appreciate it.
Awesome, brother. Thanks, man. Cheers.